Good morning. This is Jack from Alpha Charts with a state of the market video. Today is January 14th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. If you haven't yet, like and subscribe to this video. Appreciate that. Also, shout out to Howard Linzen for sending me a social leverage hat. It's awesome. Thank you so much, Howard. Let's get started with these charts. We're going to start with the S&P 500 SPX, like we always do. We have the downtrend line. We can see it's been tested numerous times, and the red is the 200-day moving average, with price now once again above it and about to challenge that downtrending line. So will this time be the same or different? I guess we'll find out next week, but a very strong start to the year. I think that's a very positive omen for the rest of the year. We'll see if it holds true. Now, again, one of the things that I'm really looking for is this 200-day moving average to start to flatten out. Going back, 200 bars, we're literally right here. So another 2 weeks, and we're going to be in this area, right? And then this 200-day moving average with the price above it will start to flatten out and potentially break above this downtrend line. And we can say that, the new bull market has probably begun. Again, the opposite of that, if it rejects here or close to here and just turns over, that would give us obviously another lower high. And that would be the exact opposite. And the bear market is still in command. Now, the one other option, obviously, is that this can just continue to kind of move sideways and chop around for, half a year or something. And that's a possibility too. And that would basically mean it would give institutions time to get back into the market and that kind of thing. So don't be surprised if we do see choppy action. I do not expect a V bottom like this to occur at all. And mainly because the Fed was pouring liquidity into the system here, where they're taking liquidity out of the system here. So we have to fight against that. When I say we, price action has to fight against that to go up. So that's why we're going to probably see that type of choppy move. So on the week, the S&P was up 2.67%. That's a beautiful thing. And when you look at the equal weighted S&P, the RSP, it was right there, about the same, 2.64. And you can see it is actually well above the 200-day and challenging the downtrend line that we've been watching, right? Same downtrend line, basically. And so it's going to have a decision to make. Again, are stocks overdone at this point? Probably in the short term, for sure. So we'll see if there's a pullback. How far does it pull back, right? Do these moving averages support it over the next week or two? How deep is that pullback? And then can it move higher from there? That would definitely give it time for this 200-day to start to flatten out. And again, as this data comes off, we hopefully will start to see a flattening to rising 200-day again, which will put us back into a bull market thesis. Okay, so that's on SPX. Looking at the Qs, what do we got here? Again, the weakest of all the indexes. Everyone knows that. Similar downtrend line, but look how far price is still below that 200-day. This has a lot more work to be done. I guess, I don't know, but either way, but it's starting to get constructive. We have this kind of shelf right here that seems to be important. You have the undercut right there back in October, and it hasn't taken this out yet. So we still have higher lows, right? And short intermediate starting to turn up again. We still have to take out this downtrend line. 200 days still up, out over here, 295. So a lot of work needs to be done in the Qs and the growth land. On the week, they were up 4.53 though. So that was quite an outperformance last week. And the equal weights were up 3.73. So what does that tell us? That tells us that the mega caps were leading the charge back higher. So was that just a snapback rally by them? Because they were so terrible? or is this a meaningful uptrend? I guess we'll find out. Yeah, obviously, over the next few weeks. The equal weight cues, though, do look better than the cap weighted. You can see here's the 200-day moving average and prices above that. So you can see under the surface, there is some buying going on, and so it's just the next leg higher is going to be rotating out of the Apples and Amazons and rotating into the new merchandise, whatever that ends up being. I don't think we really know quite yet in growth land, in technology land, basically, which is what the Qs are, what that next leadership is going to be. But definitely the equal weights look so much better than the cap weighted Qs. Looking at, let's do mid caps next, real quick. Mid caps, just phenomenal. They're equal weighted already. They're up 3.64. You have this kind of bottoming look going on here. We'll call it a complex inverted head and shoulders. I like that way to look at this, with a double head. And so now we have a very defined area, right? Very, very defined area right here. So if price can get above 479-ish, I think that's a really powerful area. Next, this 500 area will be important. And then obviously all-time highs, right? So those are the areas that I am looking for potential resistance. This has run quite a bit, like all the indexes. So I would not be shocked if we come into this 475-ish area, then we have to pull back, right? If we just rip right through it, I don't know if that's the most bullish thing that can happen. I'd want to see price action pull back somewhere around here. It could be, starting early next week, pull back into the moving averages, maybe to 460-ish, hold there, respect them, and then move higher. And then once again, this data will be taken out. And as we come back into it, this 200-day will start to flatten and hopefully start to move higher again, confirming more of a bull market stance. If this area becomes resistant and things fall apart, that obviously changes the thesis completely. But right now, the market that we have it's a bottoming pattern, right, without confirmation yet. In the mid caps, really, really strong. And mid caps, 2 billion to 100 billion is the market cap for mid caps in general. IWM. All right. So there's your downtrend line. And for this one, price is already above the 200-day and above the downtrend line. Super bullish looking chart, right? Smaller cap, more speculative names. So, this is more of a risk on type of index. And yeah, it broke out. That's amazing. Again, now with it breaking out, again, it has not closed above this downtrend line, really ever, right? This is the first one. This is a change of character. This is a big deal. Now, I don't count that because my downtrend line could just need to be thicker, right? This is the first real close above this downtrend line. And this 200-day, you can see this change in the slope is already taking place, right? It's going to start to flatten, going back. Here's your March, right? As we take out this data over the next 2 weeks, this 200-day is going to start to flatten and start to turn back up. Now, this obviously, the next area, we're right into this resistance zone right there, right? So what do we want to see happen? We want to see the pullback into the 200-day, and then we want to see the breakout, right? That is, and again, you get the little inverted head and shoulders type look there, within this bigger bottoming pattern. So that's what we are looking for right there. Again, this is extended. This is not the place to be buying. This is the place to wait for the pullback, confirmation, let the 200 hold, or the 50-day, well, there's your 50-day, all that's going to start aligning very bullishly, very quickly, if price can stay in this general 183 to 187-ish area, right? So again, really exciting stuff happening for the bulls if it can continue. Love that IWM is holding up so well. Looking at IWO, looks very, very similar. Here is, again, that similar area. It's got to pull back and then potentially break out. Strong move. IWO was up 6% on the week. That's small cap growth, right? So again, we're seeing that rotation back into more speculative areas of the market. So absolutely love that. Strong looking chart. Has not confirmed yet, so just be careful. Expect a pullback next week. Like that should be expected. But how deep and how much? Like 222's got to hold, right? 222's got to hold. I think we all can agree upon that. If price gets below 222, in this 50-day and the 200-day, I think that's not no bueno, not good. Okay, let's go into our ETFs. XLF. This is that again, has that complex inverted head and shoulders similar to the mid caps, and price is now trying to break out. Good volume. A lot of banks reported on Friday, and that was, again, some caution there, and they did just fine. And you can see this in XLF. Let's see what the IYT did. This is the big bank index basically, and it was flattish on Friday, down 0.38, but the buyers did show up, so not bad. All right, but anyway, going back to XLF, again, strong looking chart, wants to break out, maybe extended, maybe not terribly extended, to be honest. And look how this is all aligning bullishly now. Absolutely love that. Going back to that Marchish area, this is the data that needs to come off over the next 2 weeks or so, and we're going to start to see it come off, and this 200-day will start to flatten. And again, that's the bullish thesis. It's setting up for a bullish run. SMH, semiconductors. We've drawn in a potential inverted head and shoulders coming up here. Again, back above the 200-day, we're starting to see bullish alignment trying to take place. Going back to March, that's this data that needs to come off, right? Again, looks very similar to many of the charts. A little bit of a laggard, but once this data comes off, if price can stay in this general area, we're going to start to see some strong price action coming up here. So semiconductors looking absolutely fine. Transports, just gigantic move, right? 7% on the week. You don't usually see that in bear markets, that type of action, even though this was a strong move here, right? Into this overhead supply. So this is the next area that I'm watching, something like that. This $80 area, right? So there's room to the upside here, above the downtrend line, above the 200-day moving average. Again, backing and filling is to be expected. A couple down days would be actually inside days would be the most advantageous to us right here. Just some sideways movement and then a move higher. So transports are looking good. Let's look at home builders. Again, home builders are supposed to crash, and they're just not. Weekly chart is up 4.5% on the week, and it's got that bottoming look to it, double bottom-ish, and trying to break out. Again, way ahead of, look at the flat 200-day, right? Home builders are supposed to crash, but yet we have a flat 200-day. Listen, could this be a bull trap? Absolutely. This could all be a bull trap. But right now, it's the chart we have. We can't say what it could be, right? We have to trade the chart that we have. If it's a bull trap, we'll start to see things start to break down, moving averages breaking down, price getting back below the 200-day and the 50-day, and that would be our indication to go to more safety type trades. But right now, we're not seeing that. Again, I would expect a pullback here. This is extended, right? Expect a pullback and then potentially a breakout, right? Something like that. All right, that's what it looks like. Let's go back to SMH. Let's see what that was up for the week, because Qs were up quite a bit. SMH was up 6.67. Strong week, right? So those were the indexes that I like to watch to tell about just health of the market, right? Sorry, I want to do this and do that. And then let's go to a line chart and let's look at the VIX. Looking at the VIX, it's falling off a cliff now. Once we get into VIX, especially if we get down to like the 16 and 17 levels, we see spikes in the VIX, and that's usually that pullback that I'm talking about. So we're in that almost to that pullback area. It'd be fine if it, again, we see a spike in the VIX. That would not be shocking to us because we're in that pullback, area of the market as well. They kind of line up really, really nicely. Could it go lower? Sure. But expect that pullback, and the VIX is kind of confirming that. Looking at credit spreads, you see the tightening of credit spreads. And again, that more is a confirmation of bull market activity, right? Put call ratio. Again, these spikes, I'm not sure what they had to do with, but right now we have, half bears, half bulls. And so we are definitely saying that, sentiment is mixed, which again, the wall of worry is strong. And that again helps with bull market type activity, wall of worry stuff. Again, maybe 0-day options when they came online here, a lot of people were trying them out. A lot of them got probably smashed in them, right? And then basically abandoned them and went back to more traditional things. That's a possibility too. Looking at MMFI, percent of stocks above the 50-day. We're getting into these higher levels. Yes, it could go higher, but usually when it gets up to 80% or so, we tend to see pullbacks, in the market. So yeah, this range is 80-ish area tends to be pullback. Again, there's room to the upside. We may get another day or two to the upside when markets open back up on Tuesday. Remember, Monday's a market holiday. On Tuesday, right there, but again, expect a pullback, and how far it pulls back and how deep, that all matters, right? So again, we're seeing with the VIX, we're seeing with percent of stocks with the 50-day that it's setting up for some sort of pullback. If you're not long the market, that may be time to get long, depending on, again, where things hold up, where it pulls back to. Looking at the dollar, DXY, dollar index, breaking down. That's obviously a positive tailwind for the market. You're going to look at TNX, right? TNX, Treasury yields. And Treasury yields are kind of like just moving sideways, right? They're not really doing much. They're just there, right? And that's okay, right? So a lot of this is already baked in. We'll see what continues, but yields at 3.5%. And we've been kind of there for a little while now, chopping around, but just been there, higher or lower since September. So, and really the same spot we were back in June, right? Again, we had the higher and the lower and stuff. But I think the DXY, I think the dollar index is the big deal here, breaking back down. Really, we went from 114-ish down to 102 very, very quickly. And so maybe we get a spike, retest the breakdown. That can easily coincide with, maybe retest this 103 level or so. That would coincide with maybe a little bit of a pullback, right? Resistance hold, falls apart. Again, all of that are pieces to the puzzle, and they're kind of making sense. And the last part is, let's look at Bitcoin, right? Because Bitcoin is, in the week is up 0.72, but it just rolled over. This isn't Bitcoin. I'm sorry. BTC. Sorry. Bitcoin up 22%, right? That's a big deal. Let me do the USD one. On the week, up why can't I do this one? Bitcoin, what I want. I usually use the Bitcoin Coinbase one. That's the one I usually use right here. All right, on the week, up 22%, pretty amazing move in Bitcoin. And we saw this crazy tight price action here, which we mentioned before, and then you saw, so this was people buying back in to the Bitcoin, and that's held, or essentially held, kind of broke down from the 2017 highs. This is where people bought back in, didn't quite make it to, the 2019 highs. and it came back up. Now, again, is it extended? Probably, but it's Bitcoin. It doesn't care. More importantly, sentiment of risk on, right? So we have a lot of risk on type things, including Bitcoin. And let's look at gold right there. And gold is, on the weekly chart, you'll see gold is just, again, rocketed off the bottom. We'll see if this continues or not, but it's a big deal. Big bottoming pattern that's over a decade, going on over a decade. So big deal. We'll see if it continues or not. This has been resistance now twice, and it's going to try for the third time, it looks like. So lots of risk on sentiments out there. Going back to the SPX, we have these areas to watch, and again, if you're not long, if you're on the wrong side, when this does pull back into the moving averages, right, whether it goes sideways or pulls back, that's your time to change your thesis, right? Get out of things as when you can, and switch the thesis again. And then if they break down and you are long, that's the time to switch your thesis again. There's no issues with being wrong. The biggest issue is staying wrong, right? Why be stubborn? The market's going to do what it's going to do. Don't be stubborn. Just go with what it's giving us. Right now, it's giving us a bullish look. Whether it lasts a week, a month, or the rest of the year remains to be seen. 1 week at a time, 1 day at a time. No reason no reason not to add exposure at this point. And if you didn't catch the bottom, no big deal, right? Because there's going to be plenty of upside to come even if we just are coming back to retest the original 2021 high, right? Even if we just come back here and we're coming back just to here and we're going to fall apart again, right? That's a 20% move. Let's be a part of that move. Let's make some money. And then if things fall apart, we'll get out. We'll keep most of that money, not all of it, and we'll get back to a defensive position if that's what's going to go on. We'll see. Anyway, good luck. Stocks to watch coming out later today or tomorrow. Follow me on Twitter at AlphaCharts365. Become a super follow if you want more content like this. I give a lot more content to all my super follows. So check that out on Twitter at AlphaCharts365. Like and subscribe. Thanks, Howard Linson, Social Capital. Thank you so much. Take care, guys. Social leverage. All right.